Welcome to ShortView Trends, your morning market hit for Friday, March 26th. What matters today for traders? Well, what a choppy week it's been and what a fascinating week it's been, particularly after what we saw last week with the market topping on the Fed, the S&P making intraday record highs in the first half of last week coming into the Fed meeting and then reiterating those on the meeting as it was more dovish than people expected. Of course, fascinating that you can get a more dovish meeting and yet, of course, markets top on that. Classic stock markets forward-looking, buy on the rumours, sell on the fact. Added to that, of course, our short-term market models at the time last week, the first half of last week, were showing that the market was pretty greedy. We're getting lots and lots of sell signals on our 1 to 2 week market timing models. Well, since then, much has changed. As I said, markets topped pretty much on the Fed very shortly after that Q&A was ongoing and finishing. And since then, they've been chopping lower. So we're now a week and a bit on from the Fed and things have changed for two key reasons. Firstly, if you look at our models, they've very much changed their stance. As I said, early last week, pretty much sell across the board. Now they've all moved substantially lower as we've seen some risk aversion in global financial markets. And of course, that risk aversion has been pretty evident in the Russell 2000, some sharp down days over the past week and a bit. Oil price, the NASDAQ tech, all sorts of areas of global financial markets over in Asia. We've seen quite a bit of marked weakness over the last 5, 6, 7 trading sessions. And with that, you can see our risk appetite scoring system was very much on sell earlier last week, generating a clear sell signal, sell message. Over the course of the last 6 or 7, 8 trading sessions, it's unwound that sell signal as we've seen that risk aversion across the globe and started to generate a buy once again. Now that's a message we get across a lot of our different types of models, whether it's put to call ratios, technical scoring systems, or all sorts of other models like that, all of which we produce in the Daily Rag each and every day. And then secondly, the other key reason markets are getting interesting is because lots of asset prices are getting to key support levels, technical support levels from which there's a pretty good chance they'll start rallying, especially given they're backed up by lots of emerging buy signals from our short-term market timing systems. And indeed, the Russell 2000 is a key example of a market that's reaching those key support levels. As you can see from the candlestick chart in front of you now, the sort of 2070, 2100 level's been quite a key support level for the Russell 2000 over the course of this year. And we're pretty close to testing it again for a third time yesterday. Technically, the sort of rule of thumb is if you test something and hold it 3 times, it's pretty strong support. So we're building into that in the Russell 2000. It looks like it may well be the case that that's a brewing situation, a key support level from which markets and the Russell 2000 should rally. And what I'd add to that is if you look at the technical scoring system for the Russell 2000, you'll see it was on sell early last week and it's now back on buy. So we've unwound a lot of the frothiness from a technical perspective. And equally, if you look at a Russell 2000 put to call ratio model, you can see that that model was also on sell not so long ago and now again back on buy and picking up the swings nicely in the Russell 2000. So the Russell is one good example of a market that's finding a key support level. The S&P 500 was down testing its 50-day moving average yesterday. Again, that's quite interesting, quite likely to be a key sort of support area. Maybe it tests it again, who knows, but it's interesting that it's sort of finding support level and rallying nicely into the close yesterday after finding that level as key support. And over and above that, the NASDAQ 100, the sort of 12,500-ish type level, a big support level, the intraday highs from 2nd of September back in last year, and a level the NASDAQ's been around at a few times over recent weeks. And I think, not far from that level now, and quite an interesting support level. And then, of course, you can look across in Asia, where there's been a lot of the weakness in recent weeks in global risk appetite. A lot of the risk aversion has been playing out over in Asia. The Shanghai Composite, a sort of classic bellwether for Asia and indeed for many global markets, back at its 200-day moving average, finding support at that level. And Asia, of course, rallied nicely overnight. Nice strength there, and Shanghai Comp bouncing off that 200-day moving average. So things are clearly brewing in a positive sense on the long side across global financial markets. Models are moving nicely, support levels are starting to emerge. And to see exactly how we're playing this and to see all the short-term market timing models, please see today's Daily Rag, available to subscribers or for trialists on the website. Simply click on the link below if you wish to take a trial, 7-day free trial. If you give us your name and email address, we'll send you the Daily Rag for free for 7 trading sessions. No credit card details required. And equally, if you like what you see, please sign up. $49 a month, cancelable at any time, nothing further to pay. So what are we watching today? Well, the main macro data point out today is US personal income and spending out this afternoon, London time. That's always interesting. Very good update on how the US consumer is behaving and the amount of income they're getting in terms of fiscal and wage inflation and so on. Over and above that, there are not many central bankers speaking. The Bank of England Saunders is giving a speech, which is often quite interesting. And there's also a summit for Eurozone finance ministers. So that's it from us. That's your morning market hit for Friday, 26th of March. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Stay safe. Trade well.